Welcome. This is NDTV Profit. You're watching Talking Point. We're in conversation with Gautam Shah, founder and chief strategist at Goldilocks Premium Research, who's joining us on the show. Gautam, good morning. Thank you so much for joining in. And no better day to have you than on a day when the benchmark is making another lifetime high. Well, Gautam, at the moment, the Nifty, well, it's trading at wherever it is. The way forward, what is your assessment here?
Good morning. Thanks for having me. Well, I think for the last 4 months, we've gone through a lot in terms of local and global developments. And despite all that, you have the Nifty coming back every single time. And I think the test of character is really in difficult times, and the manner in which the indices have handled the difficult times in the last 6 months, I think is quite commendable. And I think, as we keep saying, liquidity plays a very important role in protecting the markets. So I think the setup is still quite strong. The leadership is returning. The momentum is backed. Participation is excellent, and there seems to be a musical chairs within the index heavyweights, because there was a time when the IT sector did so well and kept the market higher. It has taken a bit of a backseat, and now you see the banks coming back so strongly in the last 15 days, and that's really propelled the Nifty to levels of 22,700, 800. But if you really look at the Nifty itself for the last 4 months, it's been in a sort of a band. So 21,800 on the downside, 22,800 area on the upside. There have been a few attempts to break out and break down, but they have really not worked. But in this period, stocks and sectors have done exceedingly well. So I do believe that if the Nifty is able to get past this 22,800, 23,000 area, which is an important resistance based on multiple studies, you could see the next big move on the Nifty. But till that does not happen, it's just best to stay with specific sectors and stocks and ride this market without really overanalyzing and without looking at the day-to-day action.
Gautam, you spoke about rotation within the Nifty and you also spoke about the strength in banks. What's surprising is that the banks are showing a little bit of strength despite slackness from the largest of them all, HDFC Bank. The way forward here, because I reckon that it will still have to play an important role in the bank Nifty overall in general, even though ICICI and Axis Bank are pulling their own weight. What is your assessment on the bank Nifty and the banking constituents?
Yes, as you rightly said, HDFC Bank has a huge bearing on the Bank Nifty, and that was one reason why the Bank Nifty did not do as well. In fact, even Kotak Bank, given the news flow of the last 1 week, but with the comeback of ICICI Bank, I think that's pretty much made up for the underperformance of the other two banks, and that's probably the reason you have the Bank Nifty now at the doors of 50,000. So I think the trend is pretty solid. Kotak Bank, any which way, has been an underperformer for a couple of years. HDFC Bank does not have much to lose. I think at some point of time, appreciation will come, but there is not much to lose. So I think in that sense, the Bank Nifty is protected. But within the Bank Nifty itself, I think our top picks have been ICICI Bank in the private banking space and SBI in the PSU banking space, which has been an absolute favorite for almost 6 months now. And we do see both these stocks delivering supernormal returns even from current levels. On the Bank Nifty itself, I think once the level of 50,000 is cleared, which is a psychological and a technical barrier, you could potentially see a move towards 50 to 500. But the way the banks are placed, I just get the confidence that the Nifty is still in fine form. And if Reliance were to start contributing, that would be the icing on the cake.
Gautam, I just look at the India Volatility Index, and what I observe is that the index is not as substantially high as one might expect in election season. It may potentially also indicate, certain perhaps foregone conclusions. But in your opinion, under such circumstances, given the kind of environment we are in, of course, we are in election season, going in, what is your observation based on experience, given the fact that the benchmarks are near lifetime highs or are at lifetime highs, and the India Volatility Index is not substantially high in comparison?
The low volatility has been a characteristic since COVID hit us. I think since the time Nifty started rallying from 7,500 levels in March 2020, you've had an environment where volatility has been low, corrections have been shallow, and I think that's the new normal on account of liquidity. But if you really look at elections and the expectations, and if you compare it with the past, I don't think it's comparable, because when have you seen in the last 25 years that we run into elections with 19,000 crores of domestic liquidity coming in every single month? And in some sense, I think everyone has a view that the election is a non-event. So I don't think the market is very concerned about what's likely to happen in the first week of June. Having said that, definitely there could be some volatility. And as I keep telling my clients, it's life before June 4th and life after June 4th. So you don't really plan too much, in advance. I think the market should remain in good shape. We have our own positives apart from elections, which is playing out beautifully. And volatility, I think, is not a factor, because still the India volatility index is between levels of 11 and 16. All is fine. It's only when it starts moving above 16 is there a problem. So I don't see that happening anytime soon.
Gautam, you did suggest that there are plenty of positives beyond just the election which are playing in favor of the markets at the moment. What are those? If you can, help us list them.
Well, sometimes price action takes over everything. So I could talk about fundamentals, I could talk about earnings, I could talk about India's demographics, India's valuations, and the sweet spot that India is in comparison to world equity markets, because we are still one of the best performing markets in the world. And if you divide India by the rest of the world on the ratio charts, you will see that we have been in an uptrend for the last 3 years. So I think all our positives are there. I think some quarters in the market have raised that we are overvalued or we could be in bubble territory. I don't think that's true, because if you look at the historical valuations, we are slightly above mean and we are nowhere close to bubble territory. And with the earnings pickup of the last couple of weeks, and we saw the GST collections in the last couple of days, all of this just speaks volumes about the confidence the Indian market trend has. So I think put all of it together, it does seem as if this bull market will continue. There could be short, sharp corrections from time to time. We have seen this, but you have to stick to quality. I think that's the key message to your viewers, that in this market, anything that's substandard gets hit very quickly. So stay with quality, and I think your portfolio will be safe.
Gautam, let's talk about sectors beyond just the Nifty and the Bank Nifty, and one of them I want to touch upon is metals, which of course follows the commodity cycle in general as well. But there has been a little bit of resurgence of late. Your observations here, perhaps ideas that you like in this particular sector.
Well, metals has been our favored sector for almost 4.5 months now. In fact, we caught it very early because we got the indication on the charts, on the ratio charts, that things are changing, and thereafter it's just been one step higher, every single week, because stocks have participated well, fundamentals have picked up. Now you hear about all the tailwinds, the China factor is kicking in, and you have smart money which is aggressively into some of these metal stocks which are not overly valued. I know they are considered cyclical in nature, but right now I think they are structural is what we see. And I do see, looking at the ratio charts, that the metals index has the potential for another 10 to 15% upside from here. So all the top stocks, right from JSW Steel to JSPL, Nalco Sale, which we've covered multiple times in the past, Tata Steel are looking good for 200, Vedanta, which we covered in the past and looking good for a lot more. So I think this entire space has caught the attention of market participants. And with the fundamental tailwinds coming in as well, I think it's a sector where one should stay committed. So while auto, banks, pharma, chemicals also look good to us, but you need to have a very serious allocation to metals.
Gautam, the other sector which has been a quiet mover of late is the pharma sector. And again, there are a handful of names in the sector which just continue to move gradually upwards and don't even show that much volatility while they advance and they continue to advance. Your view here?
The pharma again has been a favorite sector for a year and a half now. I mean, look at the trends that you've seen in the pharma space. Look at Sun Pharma. Every single week has been a higher high for a very long time. Look at the movement in Cipla, Zydus Life, and now with Divi's Lab and Laurus Lab coming back, I think the pharma sector is also in a sweet spot at this point of time. In fact, as we speak, we are almost at lifetime highs. I think, and we are coming out of almost 2 months of consolidation. And if the breakout does happen, you could see another 8 to 10% upside, for the pharma index. So it's a sector where you stay committed. It's low beta in some sense, because in difficult days for the market, it doesn't fall much, but in good days of the market, it does well. And I think all the top names, including Dr. Reddy's, we like, and we feel that, one should stay invested in them.
Right, Gautam. The other thing that I wanted to also address was the broader market indices, which continue to advance even in this financial year. I know we've just been about a little over a month in this financial year. Of course, in the previous financial year, we had continued to see that huge outperformance from the small cap index specifically, that was followed by the mid cap index. The way forward here, do you think that that trend could likely continue moving into the next few quarters?
Well, honestly, there are no indicators, because if you overanalyze in the mid caps and small cap space, you will miss the party. I think that's been the case for a lot of people in the last 3 months, because every time you thought that, okay, now the big correction is coming, you had a shallow, a dip, and then, all the quality small caps and mid caps came back strongly. So even now, I think the setup is pretty strong. They are at lifetime highs. They continue to outperform. And mind you, in the last 4 months, the Nifty hasn't gone anywhere. We started the year at 22,000, so we are 3.5% higher. But if you look at the mid caps and small caps, they continue to maintain a series of higher tops and higher bottoms. So I think this mid cap, small cap outperformance is here to stay, and I think is likely to stay for the rest of this year. But stay in the top quality mid caps, because that's where the money is flowing in every single month. So the handful of 50, 60 quality mid caps, small caps is where the real focus is. And I think they will continue to outperform over the next 6 months.
Right, Gautam, for fundamental reasons, the IT sector is clearly out of favor at the moment. Your observations and your opinion, at what point in time do you think that it would make for a significant, lucrative bet?
See, the whole of last year, we were quite a bull on the IT space. In fact, we played the entire rally in mid-cap IT. And thereafter, a couple of months back, things just changed gradually, and we managed to identify the same, and we pretty much went overweight into the IT stocks. I still like them from a longer term perspective. If somebody's looking at 12 to 30, 36 months, I still like a TCS and HCL Tech Mahindra, and I think they can do well. But, mid-cap IT has been very richly valued. So you can't be committing into them. And I think smart money has moved away from this pocket to some of the other pockets. And obviously, there are some global challenges that we are facing. And this whole debate whether AI is going to disrupt the IT industry worldwide and India, I think that's a very valid debate as we speak today. But right now, I think it is out of favor. In this market, you don't touch underperformers. So simply stay away and focus on the other pockets.
Okay. And perhaps a final question then, Gautam, if I can take this one up for you. The auto sector, again, a little bit of resurgence playing out for fundamental reasons. But your views when it comes to charts here?
Well, it's seen a phenomenal move. I mean, you look at the charts and you realize what a great move the entire auto space has seen in the last 1.5 years. I think it is still going strong. It's just that there is some sort of musical chairs here as well, because Tata Motors has taken a bit of a breather, whereas Maruti, Eicher Motors, Escorts, Ashok Leyland have now started to do well. And I think they will continue to see further upside. So you have to be stock specific. You can't buy anything and everything in auto. And the other space that we like, and I think we didn't speak in detail about it, is chemicals. I think chemicals is making a very strong comeback. And this breakout is here to stay. So we see immense alpha being created in chemicals over the next 3 to 6 months.
Would you like to make a few names here in the chemical space, Gautam?
At Goldilocks, we like to stay with that absolute top quality. I think that's what we do, fundamentally strong and technically strong. And having said that, I think SRF, Deepak Nitrate, Gujarat Fluoro, and Aarti Industries are our top picks, and we see them doing very well.
Fair enough, Gautam. We leave it at that. Thank you so much for joining us and taking us through your analysis and views on the markets going forward. Well, there you have it. That's Gautam Shah telling us about the current state of the markets and what we can expect. And on that note, we are out of time on this edition of Talking Point. But on the other side of this break, we get you the FNO show. Stay tuned in.